I really enjoy YouTube. A lot of the people in the Tesla community have been with the company since the beginning and have made a lot of money by making accurate predictions. One of the biggest Tesla bulls on YouTube is a guy named Dave Lee. This guy makes crazy predictions about Tesla. Let's look at one of the craziest ones. He recently shared a post in which he said he'll be able to increase the value of his holdings in Tesla by the insane factor of 100, which is 100 times his initial investment, which he thought would only increase by a factor of 10. Tesla's market value went from $3 billion to $40 billion in his first prediction, but now he thinks it will go to $300 billion. That's some crazy faith. A 100x return is rarely, if ever, seen in the investment world. Stay tuned to find out why he thinks we're about to witness a revolution as world-changing as Apple's masterpiece, the iPhone. Before we get there, hit that like button. Subscribe. Dave Lee believes Tesla is just starting on its path to complexity through innovation. As you probably already know if you're a regular listener to this channel, the investor was shocked to learn that Tesla stock had gone up by a factor of 100 in just over 8 years by holding common shares, even though the economy as a whole is still in bad shape. Many people were expecting Musk to talk about Twitter's future, but he instead spoke for a long time. Barron says that some of the most important things that came up during Tesla's earnings call were the company's great quarter in which it beat analyst estimates by $3.32 billion in revenue and increased sales by $18.7 billion year over year. Steve Tesla easily beat Wall Street's predictions of 2.20 cents to $2.30 per share and $18 billion in revenue. The company's operating profit was also about $1 billion more than analysts thought it would be, which caused Tesla shares to rise $5 after hours from about $976 to close to $1,000. A lot of people put their faith in their interpretations of the earnings report. They gauge how well their company did relative to analysts' predictions of its earnings per share revenue margin and other indicators. He went on to say that the analysts don't know the majority of ordinary stock shares because some of them work for corporations where they don't even own any stock, so it doesn't matter if the company's earnings does have point or amaze these analysts, investors, and analyst expectations for young, high-growth businesses are frequently at odds, but as Tesla has confirmed to. Surpass analyst expectations for a while now. This rings true. Many analysts were taken aback by Tesla's earnings report because they had been focusing on how much the company had been beaten analysts' forecast rather than on whether or not it had exceeded investor expectations. However, Tesla's share price only increased by 6% following the report because the company had merely met or marginally exceeded expectations. Committed investors already had high hopes for Tesla and its management because of recent strong delivery numbers, which led to the call and statement. The surprise here is understandable because, according to Lee, a stock's value depends on how well the company can make money, so the fact that Tesla's first quarter results were below expectations is directly due to revenue limits. Credit Suisse says that Tesla's Gigafactory factory was shut down on March 28th because the government took more steps to stop the COVID-19 virus, which led to more cases being reported in China. Swiss said that people should stay positive, even though the Shanghai factory, which made more than half of Tesla's cars last year, had to close for a few weeks because of an electric problem. This is because Tesla's management seems to have things under control. People started stopping their cars at the end of the first quarter. This was supposed to have a big effect on the company's performance in the second quarter, since the Shanghai factory makes the most products and could see a drop of about 90%. According to Tesla, deliveries in the current quarter should be on par with those in the first 3 months of the year, and 1.47 million units are expected to be delivered this year overall. Lee says that for Tesla to keep going up every quarter, the company needs to deliver more cars than investors expect and make more money than they thought it would. Many people in the first quarter of 2030 are as hopeful as Dave Lee is about what Tesla will be able to do. 2022 investor Layer Stay Warm Capital said it thinks Tesla shares will offer a 10 times return by 2030 and maybe even more. The company's largest holding has been more positive in recent months. So the company increased its Tesla holdings in the first quarter of 2018 with the expectation that the company's stock would exceed the SP 500 during that time. They thought Tesla still had at least 10 years of growth ahead of it because it was just now starting to experience significant growth. The way Amazon overcame the NASDAQ boom in the financial crisis is instructive, as a Tesla investor, Gary Black, also made some fascinating predictions for the future of the electric vehicle blend, which included the fact that the market valuation should be $4 trillion if all $1.4 billion shares were outstanding. The Tesla's market cap would be close to $4 trillion. This is based on Black's prediction that the global penetration of electric cars will reach 60 by 2030, valuing the company at $1.09 trillion today based on 100 in earnings per share. By the end of the decade, Tesla will be producing approximately 10 million vehicles per year, with worldwide light vehicle sales hitting 85 million units, but things could get worse before they get better, as predicted by Black. For example, many fluctuations in price occurred in April 2022 are on the pivotal $1,000 barrier, as Tesla stock price went from a high of 1,152 to a Low of $902. Recent drops in Apple and Microsoft stocks show that investors are losing faith in high-tech companies. In China, worries have been raised about the high number of shutdowns that don't seem to be related to each other. Given the situation in Shanghai, it's hard to imagine how Tesla will be able to meet its delivery targets. As Tesla Bull, as reported by Ives in the note drops on Tuesday, Dan Ives is most worried about the future because of how bad things are for China's factories. One analyst says that Musk is in a bad spot for the second quarter of the rest of the year because there are so many unknowns about China's production in that quarter, which will make expectations for the rest of the year lower. As far as I can tell, these stories don't bother Cathie Woods or her company at all. ARK Invest recently said that by 2026, Tesla stock could be worth $4,600,000. In 2016, the company said that the price of a share would reach $3,000 by 2025. According to a previous article, the bull case says the price will reach $5,000 by 2026, while the bear case says it will only reach $2,900. Of course, $2,900 is a lot less than the current price of the stock. An investment firm called ARK says Tesla's values will nearly triple by 2026, even in the worst case. We are writing to investors to let them know that our Tesla model is methodologically conservative when it comes to our 2026 estimates. We think that Tesla stocks will trade like a mature corporation in 2026 instead of a high-profit growth one. Dave Lee has said many times that he plans to hold on to his stock for a long time, and he still thinks that Tesla will grow very quickly by 2030. Kelly's Blue Book says that he has good reason to believe this. This is most likely because Tesla's capital investment per additional unit of capacity has dropped from $84,000 in 2017 to $7,700 this year from January to March 2022. 75% of all electric vehicle sales in the US in the first quarter of 2022 were Teslas. The Model 3 and Model Y made up 68% of all electric cars sold in the US that year. You can trust those numbers. Tesla's new offices in Texas and its gigafactories in Shanghai and Berlin helped the company sell 7% of its cars in the third quarter. These sales were mostly of the Model S and Model X. Elon Musk's company looks ready to compete for the crown in 2023 when it plans to produce more than it did in 2022. It also plans to start making its other cars like the Cybertruck, Semi, and Roadster later this year. We'd love to hear your thoughts on this one. Leave a comment with your prediction of Tesla's stock price in 2030, and don't forget to hit the like button. Like the video, and I'll see you in the next one.